you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You are now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Hi everyone, and welcome to today's M Plus Global live stream. So yes, we are back again with another English live stream. And how's everyone doing today? I hope all of you are doing great today. Anyways, thank you for joining us tonight. It's been a while since I've been here, but back. So my name is Caitlin, and I'll be your M Plus Global anchor for tonight. Okay, so by the way, we've got a special Hello? Testing? Okay. Sorry about that little technical issue. Well, if you missed that, then welcome again to today's live stream. Back again, session. Just want to know how everyone's doing today. I'm quite okay, I guess. As great as a Tuesday. Anyways, thank you all for joining us tonight. My name is Caitlin, and I will be your M Plus Global anchor for today. So, by the way, we've got a special campaign in store for our new users. It's called the Unbox Mystery Stock. That's right. So if you're a new user or you haven't deposited any amount into your account, this is the time to do so. Okay, why do you ask? Well, basically, if you deposit 1,000 ringgit into your account, you get to try your luck and open a mystery box that has cool prizes. Now, what kind of cool prizes can you win? Well, a share of Tesla, or even Apple or Coke. Yep, that's right. So if you haven't made a deposit into your account yet, what are you waiting for? You could be the proud new owner of a Tesla stock. Now, we talked about this 330 real-time data for both the Hong Kong and US stock market. So really all you need to do to get all these cool stuff is to register your account. If you haven't done so, you can just scan the QR code here, and then after the verification process, you can go ahead and deposit the 1,000 ringgit into your account, and voila, you get all these cool benefits along with it. This campaign will last until June 15, so you've got a month. So make sure you spread the word and tell all of your friends. But unfortunately, this campaign only applies to those who haven't made a deposit into their account yet. So it's really only for new users or for those who created an account but didn't deposit any money into your account. All right. Okay, so tonight we are back with another weekly session with Loui. Hi. So we're back with another weekly session with Loui. So we will be joined by our head of research, Mr. Loui Low, as you know him. And in a bit, he'll be giving us an insightful talk on the US debt ceiling, as well as a preview of Alibaba, Tencent, and Baidu. So don't go anywhere. Don't leave your screen. Loui will be taking the floor right after this short little break.
Hi, welcome back. And today is our weekly session with Loui. And today I will be talking about the US debt ceiling, Limited, Baidu, Alibaba, and also Tencent. And I think a lot of people are actually wondering what is going to happen with this debt ceiling, because it is actually going to be affecting the stock markets. First of all, let's see what's the stock market doing first before we go into that debt ceiling discussion. But again, whatever I'm sharing right now is just for your reference purposes. If you want to be having more informed decision, maybe you can look out for your broker and ask them what stocks to buy, what stocks to sell, and that would be the better idea right now. Okay, so going into the market review, again, because we are entering this debt ceiling talk negotiations by this House of Representatives, and therefore it is very, very crucial today whether is there any deals going to be going through, and secondly, if there is nothing being concluded today, what is going to happen during 1st of January? So that is one very crucial $1,000,000 question. So before we go into that debt ceiling, we are going to talk about the weekly change first. I think all these weekly change are actually very, very useful, because we understand that what's the tone for the stock market before the debt ceiling talk. So last week until this week, Monday, we can see that Dow Jones down by near to 1%, S&P 500 down by 0.4%, Nasdaq is up 0.23%. I believe that this was due to some of this sentiment being more bullish on the technology stocks because of the rate pause, potential rate pause by the Federal Reserve, and therefore you can see that the banking stocks are actually down. The Dow Jones is down. S&P is in the middle ground, which is negative 0.42%. Nasdaq, which is more towards the heavyweight on the technology stocks, is the 0.23%. So I think this is the market review on the US stocks, and I think in the US itself, we understand that this is very, very crucial week. Therefore, it didn't show much changes throughout this period of time. If you look into the blue color line, which is S&P 500, just moved sideways, Dow just moved downwards, and also Nasdaq moved upwards. So what does it mean right now when we are going into this debt ceiling? It's very crucial to understand. All these talks and negotiation will actually contribute to more fluctuations in the stock market. I believe if today there is no deal being concluded, this might be haywire for most of the market's condition right now, and we can see maybe falling off, potential falling of this US stock markets going into perhaps the next 2 weeks down the road. So that's why it is very important to understand what is debt ceiling and how can we convert this into a trading opportunity. Okay. Before you go into that, I also want to talk about the Hong Kong market. Until yesterday, it is down 1.6%. Our market itself down by 1%. At least today itself, it is slightly better. We have after 5 days of negative performance, we are in the positive side of things for KLCI and also Hong Kong. Okay, so overall, we are being affected. So you can see that throughout the past week, it has been quite lackluster in the trading activities, and our side doesn't have a lot of things that we can actually trade. Or on the US and also Hong Kong side of things is also quite negative as well. But the only good part about last week is that the Federal Reserve, giving a 0.25% hike in terms of interest rate, and we can understand that the tone for the Federal Reserve has turned into slightly less hawkish, and therefore they are pricing in a potential flattish interest rate movements going forward. So which means that it is within our expectation to say that for the rest of the year, we are likely to look into this as just no rate hike and also no decrease of the interest rate potential going forward. Like what I mentioned last week, we have done we have done several rounds of topics about this Federal Reserve, and therefore for Federal Reserve wise, I think we already understand what sort of direction that we are in right now, because Federal Reserve right now is already into that tip of the interest rate upcycle, and therefore we are looking into a flattish tone going forward. Okay, so what is debt ceiling? So since 1917, yes, it is 1917 and not 2017. Okay, 1917 the limit was set only at 11.5 billion. Okay, and it was then raised more than 100 times from that point until right now 31.4 trillion. And this was being hit. Okay, so debt ceiling is being hit in January 2023, and US government cannot legally borrow any more money. So that is just the idea about the debt ceiling. But what is debt ceiling to, in a layman terms, is, for instance, if I have an X amount of income, I want to go to a bank to borrow money. Maybe they will allow me to borrow maybe 100K for the first time. But second time, if my income doesn't go up higher, and the bank will not allow me to increase my borrowings. So that is the idea here. So my cap is at 100K right now, and only if I can generate more money in my bank account, more income, then only I'm able to get more money from the banks. Okay, so that is the whole idea here. So which means that if the US are unable to generate more money, or they have not enough cash to repay their debt, which means that they can't increase technically they can't borrow any more money from this point onwards. So what I'm trying to say here is that because US government itself has a lot of things to pay off, like for instance, they have to pay their military, they have to pay their government civil servants. So all these are contributing to their spending. So which means that if they cannot borrow more money, they cannot pay their their civil servants, and therefore that will affect their spending going forward. So if they cannot borrow more money, they cannot spend more. So overall, what we're going to anticipate the economy activities will be in the haywire, because everything they cannot borrow anymore, they cannot repay the debt. So that's why it is so-called like a stalemate kind of situation. So debt ceiling is very important, because if they cannot borrow more, they cannot spend more, and economy go haywire, and maybe they can go default on their US the bond itself. So overall, that will actually affect the whole financial system. So it's actually very linked, very related to everyone's life. Okay. So this is the look. Okay, since long time ago, that was being said just now, it was being raised more than 100 times until the current position of 31.4 trillion US dollar. So the question right now is, who can actually raise the debt ceiling? Because if they are in this stalemate situation, what is the idea after this? Because if they cannot raise anything, they cannot do anything, means it is stalemate, and it can make the whole financial system go into haywire situation. And what sort of things, what sort of actions that US can do right now? So it is debt ceiling is like, during a parliament, they call it the House of Representatives. So in that particular meeting, then they will talk about this debt ceiling, whether they want to increase or decrease or whatever it is. It needs to go through this House of Representatives. So right now, what is the this is the look, something like our election. We have 222 seats, but in the US they have 435 seats. So majority right now is Republican, 222, and minority right now is 213. So which means that it is very close, okay, close fight. So which means that if they cannot get 2/3 majority, maybe they can't go through this debt ceiling. So what is actually holding them behind is that perhaps some of these they need to meet into some of the requirements before they can increase the debt ceiling. So all in all, who can raise the debt ceiling is the House of Representatives, and make sure that they have to come into common ground on this matter before they can increase that debt ceiling. So right now, since that there is no majority, right? So what can they do? They might go in for discussion today, but end up no conclusion, and we have to wait until June, because the 1st of June is the repayment of the debt. And if they can't repay on that, means they have defaulted on debt, and therefore that may cause further consequences. So there is no guarantee that an agreement will be met because it is very close fight. 222 versus 213. So if the Republican says they want, but minority Democratic say they don't want to increase the debt ceiling, then therefore it is a very, very critical situation here. But this is only because it is a technicality, because if they can increase continuously, like they have done more than 100 times over the past 100 years, say, it can be easily done in that manner. So I would say that based on the track record that they have been increasing debt ceiling, so continuously they would also do that. Perhaps that would be the best outcome. There is also a second solution, which I will talk later. Okay, I'll come back on that later on. So again, the Republicans are trying to use the deadline to pressure President Joe Biden to agree to spending cuts. And on 26th of April, the House approved actually a bill to raise the debt limit by 1.5 trillion, but only with the condition of that spending would be cut to 2022 level. So which means that they need Joe Biden to reduce on spending before they can approve this, or before they can come into a common ground on this matter to make sure that hey, let's meet the requirements before we can agree on something else. So that is why right now it is considered a stalemate, and it might not be able to go through today. So let's see what's going to happen. So currently the government spends more than the collection of taxes, and therefore the size of debt increases every year in tandem with spending. Do you agree on this? Because only when you want to spend, you get more debt, then you spend more, get more debt and spend more. That is the whole cycle of economic activities. So basically, if you can continue to repay, you can continue to build up your debt, you can continue to spend. So that is the whole idea here. And as a US government, the government debt is very, very important and very, very I would say that it's a gold standard of debt, and a lot of people view U.S. government debt as high standard, gold standard, and therefore a lot of countries are actually holding U.S. debt. So if the U.S. can't borrow any more money, the government will stop being able to cover all its costs, and that will actually cause a lot of people may have layoffs, or a lot of people will not get paid for as a civil servant or military. So all those areas that the government is supposed to pay them salary, they can't pay, which means that it will filter down towards the people can't pay their credit cards, they can't pay their mortgage bill, and all those are actually contributing to many other consequences. So overall, what I can say here is that because of this matter is they have to discuss the nego by today. So it is very crucial that whatever happened today or until 1st of June is very, very important. And today itself, based on the recent quarterly US books, we have this US Treasury cash balance at end of April was at 316 billion. So we are not sure what sort of amount that they have been using until right now, and if they are going into near to zero level, perhaps that will also affect their repayment. So if they can't repay, definitely we are looking into a default of debt, and that could actually cause further consequences. So again, we want to emphasize on this. If cash runs out, the US may rely on tax money and not able to meet all the public spending obligations, such as paying the public sector salaries or services, service all of its existing debt. So I think that could be very, very detrimental to the economic activities. Like I say, too many things that they need to cover, and a lot of people are actually holding on them on their debt as well, like China, Japan. Okay, so that may actually contribute to further turmoil in various other countries. So that is one thing that we have to really take note. So if Treasury bonds due in June not get repaid, it may trigger financial turmoil. So that's one of the way to look at it. But another solution, if you remember, during 2018-2019, the U.S. government under Trump administration shuts down about 35 days. So they shut down, they reduces the costs and try to use that money to you can view that as one of the ways that if they shut down for a certain period of time and they have some cash, they can repay and then continue on with another timeline, then perhaps that is also another solution. So during Trump's administration, that time, it was because he wants to build, Mexico wall. Okay, so that is another story. But again, this could be another solution. But again, this solution will be also having some of the negative impact towards the economy as well. Same thing, if they stop for 1 month, they cannot pay people's salary, and the salary cannot repay whatever mortgage or house mortgage or the credit card loans and things like that. Still the same, it will trickle down that consequences throughout the whole economic activities. But at least it can actually repay the debt for the time being, and then go through that whole process again until another timeline. Okay, so that's the whole idea here. So countries that has owned, the debt of US is Japan, about 1.1 trillion US dollar, China 867 billion, Hong Kong 654 billion. So these are some of the very big chunk that is being held by some of these countries. So if it is being defaulted, then it will trickle down to all these countries. Then it might, everything will spike in different ways. Like borrowing costs will spike in US, around the world, and being the safest asset right now, if everything has gone haywire, it has become less safe, and it may spill over to the rest of the financial market. So all in all of this will actually contribute to a negative thing in the market. So what can we do right now in the stock market? I think a lot of people would want to understand what sort of anticipation that we can actually look for in the stock market, right? So perhaps you can also look into bonds, bonds like, for instance, BND, AGG. If you are looking into safe haven asset, maybe look into the gold-related ETF, GLDM, NUGT. All these are the related, stocks or ETF that we can actually look out for if there is this kind of volatility in the market. It's best to look at whether, first of all, they can actually come to a conclusion about whether to increase the debt ceiling or not. If yes, then perhaps we can actually anticipate better opportunities on the upside of things on the financial markets. And especially in the bond market, maybe we may not see so much of selling pressure in the bond market. Yeah, okay. Then, so that's about the debt ceiling. So if you have any other questions, in the debt ceiling topic, you might want to put into the comments. I'll take it from there after during the Q&A section. But right now, we are entering a lot of earnings seasons right now, and especially in the China-related stocks. This is the time where to look out for all this like Alibaba, Tencent, or even some of the Chinese companies that is going to be reporting with their results. So all these are going to contribute to ideas of trading, because this is the best timing to trade those earnings. If there is a surprises, for instance, today Baidu has actually came out with results, and Baidu has actually come with a very interesting results that has gained strong momentum. And in fact, Baidu has, later on I'll discuss about that, Baidu's results, the net income margin is at above 20%. So as a very big company of this, it is showing growth in terms of earnings, very good margins, and beating expectations. These are the kind of trades you want to take, okay? Because it may surprise on the upside, then the share price may get up and follow through. So perhaps later on we can also use the our app to see what is the pre-market doing, because we M+ Global allow the investors to trade pre-market. So if the people in the US is actually sleeping right now, they can actually, as Asian right now, we can actually trade using the pre-market in tackling this kind of situation, whereby this is the best opportunity to maybe put your money into some of these stocks and trade while people are sleeping. So we are as a first broker in Malaysia that provides this post and pre-market trading. Okay, so coming back to this Alibaba and what sort of earning trends that we are looking right now. Oh, sorry, maybe there are some shifts in my slides. Okay, never mind. We can go on with the things that just now I've mentioned. If the X day is getting nearer, what to do and what can traders do in capturing these kind of opportunities. So I think the BND, just now I mentioned BND, AGG, TLT is related to bond, GLD, IAU, GDX, these are related to gold, and NUGT is related to the 2X. Okay, what is 2X here is, this is a leverage ETF, and leverage ETF it means that it will track certain underlying, whereby if the underlying is going up by 1%, this will go up by 2%. So this is the whole idea here about leverage ETFs. So I would suggest that if you are a sophisticated trader, then only you use the leverage ETF, and make sure that you just use leverage ETF for very, very short-term trading, like intraday trading or very, very short-term, because if you're wrong, your error can compound daily on the wrong side of things. So which means that if the market is down, I mean, if the ETF is down by 2%, next day is down by another 2%. So it will get more multiplier of errors, more multiplier of downside risk, also upside reward based on the ETF. So I would say that if you are not really looking out for very sophisticated instrument to trade on, I think you can avoid the 2X or 3X ETF. You can look out for just 1X ETF, like all these 1X ETF, which means that if the underlying is going up by 1%, this should be also going up by 1% or vice versa, okay? So that's the whole idea here. But if you don't know what to do, if you don't want to do intraday trading, you don't want to go into all this bond or even gold related trading, you can actually go into this Investco S&P 500 high dividend low volatility ETF. So what it means here is that it will select all those high dividend companies, they'll pack it together, and especially when this is packing together on the low volatility stocks, which means that low volatility movements kind of companies, they'll put it under this SPHD and provide you a very, very decent dividend. Every month, they will provide you an amount of maybe 0.1 US dollar, and I have calculated that every month they will give you a certain amount, and it translates to about 4 to 5% dividend yield. So is that amazing? Because I would think that if you want income generation, dividend generation, this could be some of the ideas that you can actually use for a longer term trade. You can do a DCA on it, dollar cost averaging on this kind of company, because they pay high dividend, which means that their earnings are very intact, and therefore they can actually generate that dividends for you. Okay. So so let's look into after that debt ceiling topic, we can actually go into earnings preview, and let's see what we have here. So this is just to show you that our app are always giving you very interesting information. Like for instance, this is taken from our app. It has Baidu here. It has Tencent here, it has the red color one, Alibaba. So these are all the information that you need from our app. One app that caters for everyone, that you just look into this particular news, you know that what sort of events are happening. You can check the economic data, China IPI data, core retail sales, crude oil inventories. You can actually track using just our app. So our app's news, these are original contents but provided by us, will be able to assist traders and also investors to do informed decisions. So based on this, we have Baidu, 16th of May just released result, Tencent, 17th of May, Baba, 18th of May. So these are some of the calendar that you can actually follow in our app itself. Okay. So let's talk about, before we go into all those companies, we also want to talk about Sea Limited, because it is part and parcel of some of the very interesting stocks that will be releasing result today as well. So if you understand the whole, Sea Limited itself, it has three business divisions. One is Shopee. Everyone knows of Shopee. I believe that everyone buys from Shopee sometimes. And this is the first time, they actually made good, strong earnings. Earnings after very, very long time of negative losses. And second business division is Garena. Garena is the one that is actually making very, very strong potential during COVID times. And when people doesn't have much to do, they can actually play games at home. So Garena served as one of the COVID beneficiary under that period of time. And C-Money is a digital financial services. So all these contribute about 3.5 billion per quarter to C Limited. And recently, they have come out with very good profits of about 0.3 billion. Although it's not much, not high enough, but this is a very good mark of a turning point, yeah, potential turning point for C Limited. If you look into the overall, the green color one is net income available for their shareholders. This is the first time that they have actually made successes into net income position. Yeah, so it is not net losses anymore for the quarterly results, but finally it has turned around for the quarter. So what do you think about this? Going forward, whether this quarter itself they can actually go into net income positive or lower net income, or even going into negative? What do you think about this? Maybe you can put in your comments, put in your thoughts into comment section. Okay, so what I can think about the C Limited is that we understand that the first time that they have actually turned around last quarter, we believe the Shopee will continue to grab traction, after the reopening of economic activities. Therefore, we think more people will be buying more stuff through Shopee or even Lazada. Later on, we'll talk about Lazada because that is related to Alibaba. So on Garena's side, we think that it will be slowing down, or because after COVID, people have gone back to work and things like that. So it has been slowing down, but still the spending power of the millennials or whoever that is playing games in Garena is still actually willing to spend, and therefore I believe that these two areas will be very stable going into this quarter. So I think based on all this that we are anticipating that has stabilized and turning around last quarter, this quarter will show good momentum into their earnings as well. So overall, let's see what's the trend so far for the expectation from the analysts. So the gray area here is that they are the expectation of from the analysts, which means that they should be turning around and getting more traction into 2023 and towards 2025. So the growth is there, and therefore we are likely to see further upside for C Limited going forward. Okay, so that is my comments about C Limited. I think C Limited has the potential because of the turnaround story last quarter, and we believe that they have managed to come to a very good business operation, be it the logistic part, because there is no supply chain disruption and all these things. They can manage their costs effectively, and therefore the earnings should be coming back going forward. Okay. So on Baidu side, Baidu is always being said as the Google of like Google in the US. So Baidu is like the China Google, but it is called Baidu. You can search many things inside Baidu. So besides that particular segment, I think there are several things that we can actually look into, which is let me check here. Yeah, online marketing services. They have membership services, cloud services, online advertising services. All those things are some of the revenue contribution for Baidu. And recent release of results say that just released about 5 p.m. just now. He has released the earnings of $2.34 per share, which beats the analyst consensus estimate of 1.79, and that is a very huge beat, which means that it is already growing first of all, and strong growth, and the earnings are there, net income margin are there, and therefore we can view this as a good set of results. So later on we can check the pre-market whether is it trading actively. If people are still sleeping, you can actually take the opportunity to buy into that company, and you can use our pre-market positioning in our app to position yourself for this stock. Okay, so overall we are quite satisfied with this, and throughout time, throughout the past 5 years, there are ups and downs, but again, as long as they are making good progress, especially during the economic recovery times, because I think during this period of time, it may be affected by some COVID-related activities, some kitchen sinking process, and therefore there is a very huge losses here. But throughout this period of time, I think they should be able to generate more growth in terms of the advertising, especially right now people are coming out to spend money, and after they have reopened the borders in China since January. So I think that could be a very good, interesting path that we can actually go into. Okay, so I think for Baidu itself, I'm also looking at the analyst consensus here. If you look into this, earnings-wise should be quite consistent going forward, and they are also expecting some growth from 2023 until 2025 going forward. So basically, we are still anticipating the reopening of borders in China would benefit overall economic activity. And bear in mind, last time we used to say that China is the largest population, and therefore after the reopening of borders, the resumption of business activities should allow them to capture all these earnings going forward. Okay, so how do we view whether is it cheap or whether is it expensive? One of the ways that I always use is I would always compare the earnings, the PE of the current PE versus the long-term 10-year average PE of this company itself, because we want to know what is the cheap, or whether is it cheap or whether is it expensive based on what people are trading in Baidu itself. So throughout the years, you can see since 10 years ago, all the PE add together, we get a mean about 29.6. So generally, people are used to trade Baidu at 29.6, but right now it is actually cheap because it is trading at 21.2 times PE. So what do you think of this? Yeah, you can actually put your thoughts into the comment section. You can tell me whether you think Baidu is actually cheap or is it expensive. But my view, based on this current setup, earnings is there, income margin are there, and I think the based on PE wise, based on the long-term PE, I think it's still decent to pick up. So I would say that overall we are anticipating a greater move for most of the China-related companies, especially after the reopening of borders, and that will capture those earnings will be able to capture during this period of time, because after they have reopened the borders, resumption of business activities, then this is a time whereby it will reflect fully into the results. Okay, so my thinking on this Baidu is that since 2021, the growth of AI revenue is likely to because they are actually looking into AI revenue, therefore there could be some limit the upside potential for the profitability. But again, when all these are settled, because of all this AI, when people are rushing into AI, they will do more R&D, marketing expenses, and things like that. So R&D expenses will actually eat into their profit. But right now, it shows that it is still not really eating into their margins yet. So you can see that it is fantastic because the earnings net income margin is actually at 20 to 23% right now. So I think if they are still maintaining at 20 to 23% income margin, that profitability will sustain. And I expect further, successes to see more turnaround in this AI-related process, and we can actually anticipate further upside for the share price going forward. And this is actually the China's largest search engine, and it's very similar to Google in the US. Okay. But one thing, the sentiment is always, going against Chinese-related AI. Okay, in the field of the recent ChatGPT that has came out since January, I think a lot of people are rushing in there. Okay, but again, the China side of things may not be able to catch up the ChatGPT. Even from a lot of China CEOs, are saying that ChatGPT is actually a very, very successful product, but they might not be able to catch up as fast as ChatGPT. So that could be a sentiment play on the Baidu's share price. So perhaps if there is any gap up position, we can see follow-through interest on the buying interest today itself. But until a certain price point, I think people will start to question whether this is fair or not fair for the share price for Baidu. So I think the question mark will comes from whether ChatGPT can actually replace most of the search engine. So that's another question mark. So what do you think about this? A lot of people are saying that we don't Google it anymore. We don't say Google it anymore, but we say let's ChatGPT. Let's find out from ChatGPT. So all these are actually contributing to the fact that sentiment is actually changing, because we as a layman, we know that last time when Google is out, people use Google as a vocab. Put it into dictionary, Google it is actually an action, right? So right now, what is your thought about this? Because ChatGPT is out, the AI fight is actually there, and will it, decrease the opportunity for Baidu? What do you think about this? My view is that as soon as they can pick up going forward 1.4, 1.5 billion of users in China will actually contribute to a very strong earnings for Baidu. That is my view on Baidu for now. Okay. Again, our next company that we are going to talk about is Tencent. Tencent, it's actually a very interesting company, whereby after I read about this profile, I believe that we can think of this Tencent company as a gaming platform company, because they invest so much in different platforms like Epic Games, Riot, Garena, right? And besides that, they have also Weixin, WeChat, and also QQ. These are social networks that they are also contributing to that particular revenue. You can see in that part we have 28.6 billion. They have some advertising, they have some fintech which is related to WeChat Pay, WePay, yeah. So basically, I think financial sector, fintech business is there. So they are really capturing most of the things. And during COVID time and during the recent years, a lot of people have played this game called PUBG, right? Everyone knows about PUBG, and all those are actually contributing to their business, because when people spend in gaming, they can really spend a lot of money. Yeah, so I think they want to buy avatar, they want to buy the virtual or clothing inside. All these are actually contributing to their income. And best thing is that until one point where government has to come in and stop people from playing, because they are really playing too much, maybe 24 hours a day, kind of things. So they have to limit some of the age, that below 18, you have to just play maybe 2 hours per day. You can only play 2 hours per day. So that is why that from that point onwards, Tencent the share price tanked because of these policies has been implemented. So some of these, all of this actually, all of this related to China side of things, they can be it can be driven by policies. So policies comes out, then they might affect their businesses. But overall, we can see that Tencent is very healthy in terms of net profit, about 106.9 billion. So that is a very interesting success, remarkable business in this. So overall, we can say that Tencent right now is still growing in terms of their gaming. We don't see slowdown, because as long as there are more and more games are coming out, and they have more games platform for people to hop on, that is where they can actually make some good money out of that. Social networking, advertisement, and also fintech, it is part and parcel of their business segment. So I see all these are still on the growing path. We are not likely to see any downside unless economic activity is on the downward cycle. Then perhaps people spend less on advertising, people spend less on transactional activities, and that would actually impact their net income. But for now, since that we are looking into recovery after reopening activities, so overall I think it is going into a very good direction for Tencent. So in terms of from Bloomberg, what I can gather here is that out of 5 years, it is quite on an upward trend, and especially after these 2 quarters of pullback, we have seen still growing trend in terms of their revenue. And in terms of their earnings, yes, during 2020 COVID, it may be seen as very peakish that time. Then 2021 comes in with a very good Q4 results, and it has stayed softer up in 2021. So I believe that during 2021, perhaps people see some slowdown, economic activities not resuming, and things like that. So right now, after Q4, we have seen a very good, remarkable rebound in the earnings, and after and this quarter is actually in the after the China reopening activity. So let's see what is going to happen. I believe that even though if the gaming section is coming down in terms of the revenue, but I believe that other than that, advertising will go up. The fintech business also will go up, which means that WePay will actually contribute to a success going forward. Okay. So as you can see that in the Bloomberg itself, as for Bloomberg analyst consensus, they are still looking at a very positive tone for most of these companies, for this Tencent earnings trend going forward. So that's why I still think that there is some good opportunity that we can actually reap from this Tencent. So some business overview, that how many users are actually in, and we can see what sort of business that, I mean, it's relatable to us. First of all, I think the Weixin and QQ, perhaps some people use QQ and Weixin, but we actually use Weixin as well. And WePay is not really in Malaysia, but you can still use that. But generally speaking, I'm looking at this ecosystem is actually full of users, full of transactional activities, and this will continue to grow as people go more cashless going forward. People will still grow in terms of that transactional, things in China, and especially right now we are thinking about, since that there is a reopening of activities in China, you can see sort of tremendous growth in this category of this ecosystem. So overall, I would say that as long as people transact cashlessly, and as long as people play their games, as long as people still communicate each other, advertising will still grow, fintech will still grow, and the gaming side will definitely still grow. It is a matter of time, or it is the growth area that we can see for most of the millennials that still playing games. I think that is where the money will come in. Yeah. So I think areas of growth, it is largest global gaming player because they have owned so many different segments of different companies on the publisher or gaming producers. So that's why they are in Garena, they are in Riot Games, Epic Games. All these are actually part and parcel of their their own products. They own that gaming platform, and therefore they will get something out of that revenue and also net income. Yep. So all these will be quite similar: fintech, payment module, wealth management, and etc. So these are areas of growth that I'm looking at right now. So again, coming back to the fundamental side of things, whether is it cheap or expensive, I'm still looking at this same 10-year average chart for Tencent. This is trading at 32.9 times. Currently they are trading at 15.5 times, which means that it is much cheaper as compared to 10 years average of what people are willing to pay over the past 10 years. And therefore, that could be one of the areas that we can think it is cheap, and we can rely on this opportunity for some trading opportunities. Okay, so this is one part of it, but you can always look at technical to see that whether it is interesting for you to trade or not. Is it having a good setup and things like that? So this is part of the fundamentals. We can actually go in depth for technical perspective later on in our app. Okay. So I'll go quickly on this Alibaba, but this is just a preview of what I think, because all of these companies like Tencent and Alibaba has not produced a result. So I just based on the latest quarterly result and see what sort of anticipation, what sort of expectation that we can actually look out for in these companies. So Alibaba, I think, is very familiar with people. A lot of people here use AliExpress, or people use Alibaba, Taobao. And even if these are not familiar to you, Lazada maybe is familiar to you because they own part of Lazada as well. So all these are actually contributing to a very interesting part of their earnings. So they have even Ali Cloud. Yeah, Ali Cloud. If you notice that they have entered into Malaysia as well, Ali Cloud. So these are some of the familiar names that you can actually think of. And we believe that all these are actually contributing to their revenue, that these business segments are still on a growing trend, because although you can say that there is a lot of competition here in the China e-commerce segment, and also there is a lot of in this cloud segment as well. So if you think that there is a lot of areas of competition in their business segment, but actually in the real reality, it is actually on a growing path. So basically what I'm trying to say that the industry is actually growing. Whether they can capture all of these businesses under them is a question mark. Is whether they can execute well. But based on the recent news flow, that Alibaba wants to plan to split its businesses into 6 independent companies, which they can explore into separate IPOs. This is very interesting because this is actually to unlock the value. If you notice, companies like a holding co company, which means like, for instance, Genting has a lot of different segments under Genting itself. Normally, we will give this holding co a discount to it. It means that if they are trading at maybe 5 ringgit, we might want to use that to discount back. Maybe their fair value is 5 ringgit, but we may want to discount another 10 to 20% just to give a discount to this holding co. Why do we do that? Is that because normally when a company is more focused into one segment, it is actually better for the shareholders. Meaning to say that the management can focus on just one business and make sure that business grow. Okay, if the management is overseeing so many different businesses, it is very the effort of overseeing the whole entire businesses will be very stressful and challenging, and therefore that is why we give some holding co discount to the fair value, and so which means that if we are looking at this kind of plans that Alibaba has since March 28, which means that any of these unlocking of value, which means that if they can go IPO, every of that companies will be unlocked. Their values will be unlocked. And what do you mean by that is basically, if 2 companies add on is 1 billion, maybe if they separate out, it can become 2 billion. So that is called unlocking value because it is being viewed as a separate entity. Like for instance, Sunway lease out Sunway Construction and Sunway REIT itself. So it can become 3 different entities, and that is a very smart move to unlock the value because it is more focused. It can generate their own growth. They have their own management to oversee that business, and therefore it is a stronger kind of investment case study. Okay, so that's why investors would like this kind of corporate exercise, and that would actually help Alibaba in terms of share price. In my view, that is called unlocking value. And yeah, so I think all of these areas, we can say that generally speaking, after China borders are actually reopened, they should be able to have more opportunities to capture more revenue and translate to more earnings. Although you can see that their recent quarterly results has some negative tone in it, but I would say that these are just some knee-jerk reaction, and perhaps we can see further upside after the reopening of activities of China. So we have to really monitor at least for 2 consecutive quarters, then we can actually see further upside for the earnings part of things, and we can understand whether this China reopening of activities has actually contributed to any of this success story in terms of turning around of companies or not. So this is very crucial because they just reopened their borders right now in January, and we have to wait another quarter to see what's happening in their results. Okay, so Alibaba right now is trading at 13.5 times. I would think that this is a very decent area because it is actually trading at 13.5 times versus 5-year average. We don't have 10-year average for Alibaba. 5-year average is at 32.6. So I think both of these companies is below 20 times PE. So perhaps that could give you some idea on fundamental side of things. It is considered as slightly cheaper. So technical point of view, later on we will share in the app itself. So I just want to recap on what can we do. What can we do for this X day of the debt ceiling? So when today if they can't really get into a conclusion for whether to increase or maintain the debt ceiling, and perhaps that may trigger some sell down in the market. And what can you do is that you can actually buy or sell or short the bond ETF, whatever it is, and you can trade on gold ETF because uncertainty period, people go for the safe haven asset. So therefore, maybe people or investors will look out for GLD, IAU, GDX, or NUGT for gold-related exposure. But if the client, you are more interested into holding into long-term position, getting dividends, throughout time. Perhaps you can look into high dividend, low volatility ETF like SPHD. That could be one of the areas that you want to monitor for some good, opportunities for longer term perspective. Okay, so that is one of the things that you can do. But for sophisticated traders, during earnings seasons, you want to have leverage of all these events. What can you do is that you can actually look into warrants or even CBBC. These are really for sophisticated traders. Make sure you understand the product fully before you trade on all these products. Like for instance, Baidu, you can go into 15953. It is a call warrant. 28317 is a put warrant. Alibaba, you can trade on this call warrant called 14311 is the code. 15438 is the put warrant. Which means that if you are bullish, you can buy the call warrant, which is call. Okay. If you are bearish on the stock, then you can buy a put. So you can speculate the downside of things for the share price for these two. But for Tencent, we can actually go for bull, CBBC. What do you mean by CBBC? Is callable bull bear contracts. Okay, so you can look out for the bull one. But for the bear contract, I don't put it here because there are very little bear contracts out there for Tencent, and for less than 3 months of expiration date towards expiry, it is only about 3, I think. So if you want to look for longer term bear contract, you can actually check it out from our app itself. Okay, so these are some of the areas that you can actually based on my seminar today, you can actually look into some of these, whether you are interested in trading in it or not, because this could give you some potential upside towards your portfolio, and you might want to trade on all these stocks or ETF. I would say that ETF are better picks because it can diversify out your risk in a way, and to get exposure onto that particular sector or segment. Like for instance, you buy into gold ETF, you are exposed to the safe haven asset. If you're buying into bond, you are buying into some safe asset as well. But if you're buying into S&P 500, high dividend, low volatility, those are the areas that is also defensive in one way, because those are the companies that are paying high dividend, and so those are considered defensive. So what I want to mention here is that throughout this period of time, you can use this kind of tools, this kind of instrument to trade and to profit out of it. Okay, so earnings season, we have Baidu, Alibaba, Tencent. These are some of the call and put warrants, and also CBBC that you can actually look out for. So personally, I like CBBC more because it is having less to monitor. Like for instance, warrants, you have to look into their implied volatility, their delta, their gamma. All these are actually too sophisticated. So if you want to calculate all those, maybe it will take some time to calculate the fair value and whether is there any arbitrage opportunities or not. And sometimes there can be a lot of there can be something that affect the implied volatility. Say for instance, the issuer wants to change the implied volatility overnight. They can do that as well. So that could actually affect people's opportunity to make money. But for callable bull bear contract, you just look at the call price. If you think that the current position you can still have some upside, then you just trade on that particular direction, and the call level will be your cut loss level. So which means that once it hit the call level, your contract will be called back, and then that is so-called a game over for you. So you lose money based on that call level. So as long as you are on the right direction, first of all, you don't have to. Why CBBC is better than warrants? In my view, is that because if you are not so sophisticated to understand all those delta, gamma, implied volatility, then you can use CBBC. It's a very simple tool for you to understand whether you want to speculate up or speculate down for particular underlying shares or even index. Okay, so those are the areas that you can actually look out for trading opportunities. So that comes to an end for my session. Let's move into Q&A section. Yeah, stay tuned and don't go away for that.
How to buy Hong Kong and US stocks with M+ Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You're now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Back. Hi everyone, welcome back. Okay, so now we're gonna head into a little Q&A session. So if you have any questions that you'd like Loui to answer for you, just put them in the chat and we'll be addressing them as we go on. So just now we saw a few questions in the chat that we haven't addressed yet, so we will look at them now. All right, so the first question we have for Loui is, what is the increased debt ceiling and what to expect?
So I think just now we have mentioned about debt ceiling. What is debt ceiling about? It's like I have X amount of money. I want to go to a bank to borrow. The borrower say that, I can only have 100K for now. And if I don't have more cash, my limit is 100K. So it's the same thing in the US. So US right now they are having this debt ceiling. So they have to agree eye to eye, the House of Representatives, to say that we are agreeing to increase this debt ceiling so that we can actually borrow more.
Okay.
So because of this debt ceiling at 31.4 trillion, so they can't really borrow more because they have hit that. They have already, yes, there's a lot. Even 1 billion is a lot. 31. Yeah, 31.4. So which means that right now they can't borrow more because they have hit that level of debt. So which means that right now there are several solutions. One is to increase the debt ceiling by saying that, right now my debt ceiling is maybe 32 trillion or 33 trillion. Then you can borrow until 33 trillion. So it's like your limit, your capping.
Okay.
The second solution that I think they have used before is to shut down the government so that they have buying some time to save up some money. Let's say, for instance, per day you are saying that maybe 1 billion or 10 billion USD, 30 days, 300 billion USD. Let's say you can use that 300 billion to repay part of your debt. You service your debt first. So it's like monthly repayment, so you can service your debt first. Then later on, you reopen the government, then find more money from elsewhere. Then only you survive through that.
Who are they in debt to?
Okay, so they borrow money from central bank. So,
right.
Yeah. So in that sense, the US government also need to borrow from someone, right? And also they have their they also put out all this to, like, for instance, government also will issue debt, like, for instance, like Malaysia, and we issue some bonds. Then people buy our bonds, then we repay them. So it's that kind of situation here.
Okay.
So overall, what we're trying to say here is that there are a few situations here to answer that question. To increase the debt ceiling, first of all. Secondly, they are buying time by shutting down the government.
Okay.
Then thirdly is that I remember, if I remember correctly, they can also suspend this debt ceiling, which means that they ignore it for a while, then they resume to look into it. But I'm not too sure whether that makes sense or not, because at the end of the day, you still have to service your debt.
Yeah.
So whatever it is, it should be, you have to repay your debt or whatever it is. So again, all this will actually contribute. What to expect if they can't service the debt. That would actually mean it's a so-called technical default situation, and that will cause, like I said just now, people might be having layoffs, and those layoffs might not be able to repay their debt, might not be repay their house loan or whatever mortgage they have. And that is it trickles down to the whole financial system.
Right.
So to expect this, if they don't increase, then therefore it will actually contribute to further turmoil in the market. Okay. And so that, it's quite scary, but generally speaking,
sounds scary.
Since 1917, they have been increasing more than 100 times of this debt ceiling. So which means that
So they've just always been increasing the debt
yeah,
ceiling.
so assume that this kind of scenarios has happened more than 100 times in the past 100 years. I mean, perhaps they can still continue to increase for another few times lah. So I mean, that is just the idea here, because probability says that history will repeat itself.
Right.
So this might be true for until for the forever if they continue to increase.
What would happen if they just keep on increasing it? Like, they're just going to be even more in debt, right?
Yes. So yeah, coming back to that question, yes, you are more in debt, but as long as you can continue to roll, which means that whatever you are receiving as taxes as a government, you receive the revenue, you can spend, you can repay the debt, then that should be fine.
Okay.
So yeah, I mean, it sounds like a vicious cycle. You continue to borrow, spend, borrow, spend. Yeah. So yes, it can be detrimental, but again, that is how the economy works. As long as you can repay the debt, you can borrow more. You can repay the debt, you can borrow more. So yeah, just that.
But is it a good idea to shut down the government for this?
Not to say good or bad, but if it comes down to one point that you cannot come to a conclusion to increase the debt ceiling, you have to go for plan B to at least survive for another month. Let's say for instance, you shut down, then you can have some cash, repay the debt, then you reopen the government or whatever operations that you have, then you continue with it. So it's kicking the can down the road, but again, you need to do what you need to do,
right?
That's
okay.
Yeah.
I hope that answers your question. We'll go to the next question now. So Miracle on FB says, printing more US dollars to repay the debt is a good solution or not?
By printing more US dollar, actually you will contribute to one thing, which is called inflation. Because if you print more money, then people need to use more money to buy that particular item. So it makes that inflationary pressure,
right,
which the Fed is always trying to tackle. The Federal Reserve is always saying that over the past year the inflationary pressure is going up. So if you're using that to repay that, yes, you can actually solve the situation, but it causes
a bigger situation.
Yeah, a bigger situation whereby the Fed is actually trying to tackle and trying to tone down that inflation pressure. So I guess yes and no. I mean, if they need to do that, yeah, okay. But again, if Federal Reserve is actually trying to tackle the inflationary pressure, then if this printing of money is actually contributing to that, so I think that will not be a good way to solve that situation, in my view. Yeah.
Okay, understand.
Yeah.
Okay, so next question. If I buy SPHD, will I receive dividend from it? Because it doesn't show dividend yield on the information section under this ETF general page, although action page showed dividend payout.
Yep. So if we check SPHD, is it? Yeah, SPHD. Okay, and then profile. Yeah, you cannot find any dividend yield from here, but actions will tell you that they pay monthly, and it is per month they pay you 0.145 cents. It's 0.145 US dollar. Yeah, sorry. Then that will be your dividend. So to answer your question, I think it will pay dividend, and this is the dividend that you are going to be getting.
How do they pay out the dividend?
They pay out, then it will be in your account. Yeah. So then So the theory is like same as Malaysia, but Malaysia is like if you have an account of CDS account,
right,
the dividend amount will straight away transfer back to your bank account. Okay. But for the US side and the Hong Kong side, I think we need to check how they would bank into you, but definitely you will get that dividend. Just that the banking, the processes wise, we need to check on that. Yeah. Okay. So yep.
Okay. So here we have a question about the brokerage fee on YouTube. So what is the service charge when you buy and sell?
So the answer is what? The brokerage fee is 0.1% or minimum of Hong Kong dollar 18 or US dollar 3. 3 US dollars. So that is I think that we have that in our landing page or in our M Plus online. Global. So you can actually check it out more. And also you can actually look into here, which is in our help fees, under fees, if I'm not mistaken. Yep. So under Hong Kong and US stock fees, those are the those are the pages that you can actually look out for the fees structure. Okay, so you can check it out. Our help center that would give you more information.
Yeah.
Okay. Yep.
Okay, so now I have a question.
Okay. Yeah.
Now, I think Malaysian investors are not quite familiar with some listed Chinese companies in the Hong Kong market. So could you briefly explain the Hong Kong market and why Malaysians should leverage on this market compared to others?
Okay. So first of all, we always invest in Malaysia. Yeah. Then secondly, we will look for opportunities outside of Hong Kong, towards Hong Kong or even US. Why for Malaysia first? I think firstly we have a considerable good banking structure. So that is why you can see our banks are nearly the top 30 counters in Bursa Stock Exchange. And those are the areas is very, very defensive, and they have been paying very, very good handsome dividend over the years. So no doubt about it, they are defensive. They are sort of like gold standard in Malaysia for what to buy. Normally people will buy. So we have covered that Malaysia region for defensiveness, and we are so-called slightly in terms of the recent economic activities. We are also in the positive side of things, such as in last 2 quarters or 3 quarters ago, we were GDP about 14.1%. Then we continuously grow by 7%, and this quarter we grew by 5.6%. So in that sense, we understand the whole situation here in Malaysia. We are banking on a good recovery tone, and also as well as a dividend, a good dividend in the banking stocks. But why do we want to go abroad to Hong Kong and even US? I think Hong Kong stock market is it is very clear to say that Hong Kong is the top financial hubs in the world, and it easily gives us a very good approach. If we want to buy into China assets, we can straight away buy through Hong Kong. And once we go into Hong Kong, it's very interesting that we are actually exploring the economic activities of 1.5 billion population. So that is the whole idea here. Why do we want to invest in Hong Kong stock market, or even using Hong Kong to get into China asset? Is because of the huge economy or huge population that generates the whole economic activities so vibrant, and therefore that is one of the main reasons. So we should be able to leverage on this, because right now we have M+ global average.
Right.
So that's why we want to run our investors or traders to look into this kind of population, because we can't really buy, just like what I mentioned, Baba, Baidu, from Malaysian market. You can only buy structured warrants, but those are derivatives out of this company. It is not really owning a piece of the shares of this company. So why do we want to go in Hong Kong? Is because we want to go into that area of a very huge population. China assets is decent, and even their dividends are stronger as well. Why do I say so? Is because China corporates normally will pay back to China as a country in a very good handsome dividends. So some companies can go up to about 8 to 10% dividend yield per year. So those are the areas that first of all, China corporations are the economic activities of 1.5 billion population. Secondly is that they always pay handsome dividend to China as a country. So I think those are the areas that we want to let our investors or traders explore. Yep.
I think that answers the question.
Yep.
Okay, next question. The share prices of Tencent and Alibaba have been under pressure recently. What are the key factors affecting those Hong Kong stocks, and what is your view on the future direction of the share price?
Okay, so what I can think of is basically all these Chinese related stocks has an issue of potential policies, it's called the policies driven kind of risk factor. So anything that's commented by the Chinese government may actually affect the share price of the companies. But to understand all this view on all these companies, first of all, I would always look at whether these companies can generate revenue or generate net income, because these are the two factors that as an investor you should be looking at,
Yeah.
other than looking at just policies driven. So if they can continuously make good profit, good earnings, then perhaps it is considered as they might reward shareholders going forward based on maybe the dividends. Or secondly, if the share price goes up, then they can pay you, share price go up, you have capital appreciation. So overall, I would say that these recent rounds of things, because firstly, could be policies driven that is driving down the share price. Secondly, is that maybe the economic activities has not been great in China because of the lockdown activities.
Right.
And thirdly is because they are also part and parcel of technology-related counters, which has been affected by the Federal Reserve interest rate upcycle. So last time we did mention about why interest rate upcycle would actually affect. Yeah, let me
refresh my mind on that.
Yeah. So let me talk about this, because when you are increasing the interest rate, definitely these companies of technology stocks will be affected, because they are being viewed as highly geared kind of companies. They need to borrow money to do R&D on their technological stuff.
Yeah.
So when the Federal Reserve is increasing the rates right now, and therefore that could actually hamper their that could actually, first of all, increase their borrowing costs, which means that they need to pay more in terms of finance costs. So those highly geared companies normally is technology stocks, and that is why technology stocks has been hampered down. So Alibaba and Tencent could be under that category of fintech or technology related driven kind of companies. So that is why it can be also being pressured down by the Federal Reserve interest rate upcycle kind of sentiment. Yeah. So so to answer the question, definitely is affected by a few factors. But if we look at whether it is undervalued or not, just now we have mentioned about the fundamental things, like for instance, we talk about their 10-year PE. They are currently trading at below 10-year PE. So I think that could be considered as undervalued. And so most of, I think Alibaba, Baidu, and also Tencent is categorized as still below the long-term PE kind of view. So I believe that is considered as undervalued. Yep.
Okay. There's a question on the screen here.
Yeah.
How do you think about most US fund managers are selling Chinese stock, and Warren Buffett as well? Is the risk higher than the reward?
So most of these fund managers, or even you call it investors like Warren Buffett, has actually been selling stocks in BYD and some of these Chinese stocks. Yes, it could be they are actually thinking that the risk to reward may be higher at this point of time. It could be also because they have bought in much ahead,
by earlier.
Yeah, very long time ago. So which means that they can be already profiting maybe more than 50 or 80% out of it. So right now maybe they just want to sell off to take profits. But I would think that this will definitely bring the sentiment. This will definitely give the sentiment to say that perhaps Chinese stocks is not so interesting anymore, or maybe they can be looking at potential market turmoil in the near term, or maybe the downside cycle. So they are trying to be safe and to keep as much cash as possible. So for instance, I think this could be one of the areas that they might be looking at. So they might be looking at valuation maybe is not up to their standard, or the growth factor is not up to their standard, so they sell off the shares. Or they can think that they have already made good money out of this company, so they want to take profit on these companies. So all in all, there are many factors, because we are not the fund manager. We are not Warren Buffett, but based on the stats, based on what we see in the revenue, in terms of the earnings profile is still growing. So I still think that Chinese stocks has a good potential, especially after the we call the reopening of activities since January. That could be one of the areas that I would think that China is looking good because of these reopening activities. Although stats has not been showing good signs yet, but I still want to see at least 2 quarters of earnings after the reopening, because that will be a very, very crucial point to take note of whether at least first quarter we understand that it is considered as they will go for Chinese New Year break.
Right.
Yeah, and Chinese New Year break, maybe they will spend more time in domestic region because they want to go back kampong or whatever it is. So that could be one of the reasons that we might not be able to see a strong upsurge or strong uptick in terms of earnings yet. So to be safe, you have to monitor until maybe June closing for 2 quarters earnings, and we monitor from there because April, May, and June will reflect perhaps in July or even August reporting season. So that therefore, from that point, we can understand more whether the stocks has potential or not. So currently, I'm still thinking that there is potential, but we need to verify with 2 quarters results.
Okay.
Yeah.
Okay, so I think that is all the questions that we have for now. We will be moving on to our mini game. So we just have a few questions as per usual, and the winners will walk away with a 20 ringgit trading voucher that will be credited into your account. Let's go to the first question. All right, so question number 1. These are the advantages of investing in the Hong Kong markets except A, abundant liquidity, B, proxy to China growing economy, C, option trading is available for trading, and D, international financial hub.
I think I mentioned quite a number of points in my statement just now, right? So I think it's not too hard. Wow. These are the advantages of investing in Hong Kong markets except. Okay, you have to.
Don't forget except.
Yep. Except Hong Kong markets. So A, abundant liquidity, B, proxy, D, C, options trading, D, international. Yeah, except. Okay. Now you get it.
Trick question.
Yes. MCQ is tricky. Okay, great.
Okay, so the correct answer is C, option trading is not available for trading in the Hong Kong market.
Yeah.
Okay, so let's move on to question 2.
Okay.
Okay, Louis?
Yeah, the following Hong Kong companies are the beneficiary of AI trend except A, SenseTime, B, Alibaba, C, ICBC, D, Baidu. So what is the answer? Caitlin, do you know the answer?
I only know it because people tell me.
Okay, seems like we have a lot of people answering it.
People are saying C, some people saying A.
Oh, wow.
Which is the correct answer?
Maybe you can review the answer.
Okay.
Yeah. Right.
So the correct answer is actually C, ICBC Bank.
Okay.
Okay, let's move on to the next question.
Yep.
Okay, so what is dubbed the Google of China? A, Bing, B, Yahoo, C, Baidu, or D, none of the above? I feel like today's questions are better than usual.
Yep. All right. Just now, I think I mentioned this in one of my slides, so I think you should be able to get it. Yeah.
Okay, so the answer is C, Baidu. So congratulations to all of those who got it correct. Now I just want to recap our current promo that's going on. So for those of you who haven't heard yet, we have this promo called Unbox Mystery Stock. So it's for new users or users who haven't deposited any amount of money into their account yet. So basically, what you have to do to get this, if you're a new user, just download the app, register your account, and deposit 1,000 ringgit into your account, and you get to try your luck and open the mystery box, which has cool prizes. So you can open the prize. You can actually check this on your Me page on the app. So you click Me, and it's right there at the top. So yeah, if you're a new user, you can click it, and then it'll say open a box. So you press it, and then you get a chance to win a Tesla stock or Apple or Snapchat or Google. There's a lot of cool stuff right there. Yeah, even Manchester United, okay. Yeah, so if you're a new user or if you haven't deposited any amount of money into your account yet, go ahead and do so. Deposit 1,000 ringgit to be able to own one of these cool shares. And you will also get 30 days free market data for Hong Kong and US.
Yes, it's very, that is very, very crucial.
Yeah, I would think so.
Yep. Nice.
Okay, so now to wrap up the show, we'll just announce our little winners for the mini game. Okay, so our first winner is Jason Uy. Congratulations. Second winner. Congratulations. And the third winner is Lai Meng. Now we'll be dropping in a Google form into the chat box below. So don't forget to click on the link and input all your details there. So your name, your IC, your contact number, and your UID from the app. So if you don't know where to get it, it's on the app. Just go to your Me page and it's in the top left corner. Congratulations to all of you, and thank you so much for tuning in today. Thank you for listening as well and for paying close attention to everything that's been going on. I hope this has been a productive session for all of you. So for anyone who missed out today, you can always go ahead and check our social pages at M+ Online, and you can rewatch our old live streams as well as keep up to date with the new ones. All right, so I'm Caitlin.
And I'm Louis. Thank you.
Thank you all for joining us tonight. It's been a pleasure hosting you.